All right, what's going on, guys? Welcome to day one of the boot camp. Um, not much gonna be as far as like chart wise. We're not gonna be talking much on the charts. Um, oh, okay. Basically, I'm just gonna do this will be like a breakdown of everything that we should expect to see coming into charts, such as liquidity, right? We'll be going over a bunch of things pretty much. This will span over, I'm pretty sure it's like 30 days or so. Maybe more, but we'll see how it goes. There's just so many concepts that we'll start to go over throughout this boot camp. This is not even half of it. This is not even a quarter of it. Everything that we'll cover will be pretty much, it's going to be a lot. I'm going to break everything down specifically to the T at each concept that I've used, each concept that I don't use, just everything about trading. And, you know, that'll give you guys the space to take whatever you want and then just run with it. Keep in mind, we still have our Discord. If you want free info and free mentorship, go ahead and join that. There is a paid version, which obviously will be more in depth of things, but the free version, you know, will still help a lot. Like the paid one is just for people who really just want to, you know, go over the edge or really work with like-minded traders, such as myself and every other admin or educator in the group, right? So pretty much for today, for this video to get dropped, only thing we're going to cover today is just different, pretty much just basic stuff in the market, such as liquidity, right? So when it comes to liquidity, there's many different forms of liquidity. Every high every high or low is a form of liquidity, right? Now that doesn't mean too much. That's just a general saying. There is a lot more that goes into that, right? So now we go to different types of liquidity. We have equal highs. We have equal lows. Previous day high. Previous day low. Session highs. Session highs and lows. We have previous week, previous month, all that. Like these are all forms of liquidity, right? Such as here that we have market, we have these equal highs. So at some point we expect price to reach for these highs. Now, if the market was still open and let's say this was our 6:30 open, I'd be looking back to see where is the draw, like where are we gonna push up to? So if momentum was shifting higher, right, I'm going to be looking to take these highs. So any buy I'm going to place will go up into these highs, right? And stop loss below. That's how you measure liquidity. And that's liquidity is always your target unless it's being swept. So when we sweep liquidity, we want to see price move the other way to where the actual draw is. Like we need liquidity to get liquidity, right? Pretty much plain and simple. To move the market, you need money, and to profit off the market, there needs to be a point where there is, if we're sellers and buyers are still up here, then the sellers need to push price up, take out buyers to move price down. The buyers need to push price down, take out sellers to move price up, right? It's all a transition between buying and selling. Couple other things. This is going to be for people that are crazy new to trading, right? So let's just kind of break down a candle. With the candle, my black candles are going to be bearish or short or sell candles. White candles are going to be bullish, longs, or buy candles. When a candle opens, right, you'll see that price pushed down and closed here. This was our close. This was the new candle's open. Close, open, right? So if we mark that, we have the close. We have we have the open, and then, you know, etc. These wicks, as we call them, this is going to be your high of that particular candle. This is going to be the low. We're so zoomed in, so it's not going to mark right. But high, low. So when we look at this, we have, for every candle, there's an open, there's a high, there's a low, and there's a close. This is the anatomy of a candle, right? This is basically how we measure the price movements from this high to this low and where price opened up on a new candle. Now each time frame is going to have its own set of candles. Some candles will look bearish, some candles will look bullish, some candles will it won't even align, but that's why we split the higher time frames from the lower time frames up, right? Now for people completely new to trading, what we are basically doing is measuring the market on a daily basis from typically from the New York Open, right? The New York Open would be, for me, the 6:30, but if you live on the East Coast, it'll be 9:30. Central, you will be at, I believe, 8:30. Right, so 6:30, 8:30, and 9:30. Those will be your times for these sessions. Now, we'll get into the other sessions later on, but I want everyone to focus on New York mainly. That's mainly where we'll see these trades unfold, right? But this has just been a quick introduction to stuff that we're going to be going over. Video is going to be dropped every day, so please expect that. I can't say what time, but we'll try to shoot for probably like noon Pacific Standard Time. If you have questions, I will drop the Discord link in there so you guys can join the Discord, or just DM me for the link and I will send it to you guys. Cool. It's going to be a lot of info, so make sure you guys are taking notes or, you know, referring back to topics, and definitely just join the Discord to ask questions. That's going to be your biggest thing while pursuing this. Cool. All right. Hope to see you guys in the next video.